What's happening, crypto fam? Happy Tuesday. Good morning and welcome back to Love for Crypto. I'm Scott. It's a pleasure to have you here. I appreciate you taking the time out to consume the content, and I'm sorry the video is late. I've had a bit of an hectic morning. I want to talk today about the banks, CBDCs, why they need XRP and other bridge assets, and why the Internet of Value is the future of finance and monetary policy. So, we're going to start with why the banks need XRP. Why do the banks need XRP and bridge assets? Why does the Internet of Value need bridge assets? It comes down to the fact of something called the Triffin's dilemma. Something identified in the 60s by a Belgian-American economist, Robert Triffin. All right? It was all to do with the global reserve currency that you use to mediate and instigate global trade. I.e., if some motherfucker in the Middle East wants to buy some oil off some other country, they got to buy dollars first, haven't they? And then they buy the oil in the dollars, and everything's pegged to the dollar. Well, there's your dilemma, mate. Causes problems. The Triffin dilemma, or Triffin paradox, is the conflict of economic interest that arises between short-term domestic and long-term international objectives for countries whose currencies serve as a global reserve currency. This dilemma was identified in the 60s by Belgian-American economist Robert Triffin, who pointed out that a country whose currency being used as the global reserve currency foreign nations wish to hold must be willing to supply the world with an extra supply of its currency to fulfill the world demand for these foreign exchange reserves, thus leading to a trade deficit. The use of a national currency, such as the US dollar as a global reserve currency, leads to tension between its national and global monetary policy. This is reflected in fundamental imbalances in the balance of payments, specifically the current account, as some goals require outflow of dollars from the United States while others require an overall inflow. Specifically, the Triffin dilemma is usually cited to articulate the problems with the role of the US dollar as the reserve currency under the Bretton Woods system. Reset, anyone? John Maynard Keynes. We've been over this before, by the way, so if I'm fucking boring you with shit I've done, I'm sorry, but it doesn't seem to have fucking stuck with half of the fucking Bitcoin community, so I'm going over it again. That almost hurt. So, they anticipated the difficulty had advocated the use of global reserve currency called Bancor, currently the IMF's SDRs, are the closest thing to the proposed Bancor, but have not been adopted widely enough to replace the dollar. And the global reserve currency, FYI, the IMF's SDRs, special drawing rights basket of the XDR, there's actually 203 billion of them, only 100 billion XRP. Wind your neck in trying to say there's too many XRP. In the wake of the financial crisis 2007-2008, the governor of the People's Bank of China inexplicitly named the reserve currency status of the US dollar as a contributing factor to the global savings and investment imbalances that led to the crisis. Excuse me. As such, the Triffin dilemma is related to the global savings glut hypothesis because the dollar reserve currency role exacerbates the US current account deficit due to heightened demand for dollars. So, we had a lack of liquidity. Lack of liquidity that led to shit like this. China calls for new world currency. 2009. China Central Bank on Monday proposed replacing the US dollar as the international reserve currency. March 2009, China calls for new global currency. March 2009, China calls for new global currency. The UN calls for a new reserve currency to end the dollar's privilege. The Economic Times, that was on October 2009, China calls for new reserve currency. UK Central Bank chief digital currency displacing the US dollar as global reserve. Europe's central banks are starting to replace dollar reserves with the yuan. China calls for new reserve currency. Scrap dollar as reserve currency, UN report. You can clearly see the powers that be don't want the US dollar as the reserve currency anymore. They don't. They just don't. And that's not just China, it's not just Russia, it's the United Nations, it's Europe, it's the UK, it is everyone. UN calls for new reserve. The Economic Times privacy and cookie policy needs to fuck off my page so I can read the actual fucking article, you fucking knobheads. Get the fuck off. I want... Seriously, bruh. Put your fucking article on, I'm gone. Man's bouncing. Right, yeah, thought so. UN calls for new reserve currency to end the dollar privilege. Istanbul. Now, this was written in October 2009. That this ain't no new news, so don't start taking it anywhere like it is new news. I'm just trying to remind people that the internet of value and the replacement of the US dollar as the reserve currency and a new bridge assets being implemented has been happening since 2008. Yeah, it's not brand new in the last couple of years. Istanbul, the United Nations called on Tuesday for a new global reserve currency to end the dollar supremacy, which has allowed the United States the privilege of building a huge trade deficit. Important progress. These are just trade wars and everything is all to do with it. It's affecting the price of oil, the trade wars, the imbalances between emerging markets from big market. Oh, mate, it is fucking massive. Massive. So important progress in managing imbalances can be made by reducing the reserve currency country's privilege to run external deficits in order to provide international liquidity. UN Secretary General for Economic and Social Affairs Shah Zukang said, speaking at the annual meetings of the International Monetary Fund and World Bank in Istanbul, he said it is timely to emphasize that such a system also creates a more equitable method of sharing the signage derived from providing global liquidity. What the fuck that word meant. He said greater use of a truly global reserve currency such as the IMF special drawing rights SDRs enables the signage gain or to be deployed for development purposes. Well, the SDR's been out quite a while and they're not providing on-demand liquidity, aren't they? They're not solving the problems. There's no full-on solution within the SDR. There is within blockchain, XRP, other bridge assets, and CBDCs. Make no fucking mistake of it. A digital economy running on the internet of value. The SDRs are the asset used in the IMF transactions and are based on a basket of four currencies: the dollar, the euro, the yen, and the pound, which is calculated daily. China had called in March for a new dominant world reserve currency instead of the dollar in a system with a framework of the Washington-based IMF. So, they've all been... I've said it before, again, someone's going to come out and be like, oh, well, if XRP was made in America, what's the guarantee China's going to use it? There is no guarantee China's going to use it, bro. But it's basically America putting on the table, or some people from America putting on the table what China have asked for. They've asked for a currency not pegged to America's economy. They've asked for a currency not pegged to America's government. They've asked for a currency that's not controlled by America's government. They've asked for a currency that's not controlled, pegged, or fucking whatever to anyone else's government. They've got it in XRP. Now, you could argue that Russia's either gonna make one or have made one. Could be Bitcoin. Satoshi could be in Russia. Who knows? The Russians could have made Bitcoin as their bridge asset. The Americans could have made XRP as their bridge asset. China could be making theirs behind a walled garden and closed doors. Who the fuck knows? At the end of the day, it is ILP, the Interledger Protocol, that will find the paths for these assets to be traded across. That is why they'll agree. They might not have to use XRP. They might not want to use XRP. They're not going to fucking care, because the machines that they program to go for the fastest, cheapest option through the internet of value is likely going to choose XRP at some point, if not all the fucking time, before they get more competitors. So, we then come to central bank CBDCs and the internet of value. Every field, people are seeming shocked when you hear something about CBDCs, and I'm like, I I've been talking about that shit since January 2018. Where the fuck have you been? Bab was on that in January 2018. We knew about CBDCs almost instantly. I've known about them as long as I've known about XRP, and people are acting like it's new talk. It's not new talk. They've known for fucking ages, mate. Ages. Example straight away here, I've got a Guardian article from the 19th of November 2018 about the world central bankers have begun to discuss the idea of central bank digital currencies, CBDCs. IBM, 29th of October last year, central bank digital currencies explained. The IBM network is massive, people know. ECB supports central bank digital currencies, the next generation of digital currencies in the European Parliament. That is a PDF. I'm going to have a little look at this because I don't think I've fucking seen it yet. The next generation of digital currencies. November 2019. Ooh, I ain't seen that. Google that. Go and have a look at that bad boy. The next generation of digital currencies in search of stability. Monetary Dialogue Papers, December 2019. Interesting. The content, should we fear the rise of global stablecoins, network effects on global scale? What is a stablecoin, by the way? Is dollar stable? Because people make a hell of a lot of money off its volatility, mate. It might be stable inside America, it's always $1. Nice and stable. Is it stable globally? Is it fuck? No such thing as stable coins. There's no such thing as stable assets unless you're in your nice little walled garden where it just remains one unit is one unit. Rick and Morty, change the 1 to a 0 and watch your economy bomb, mate. Fucking stable coins. What the fuck's a stable coin? Talking out your ass, man. It's pegged to something else. Is there something else stable? Do you know what I mean? What the fuck's stable in a world where everything progresses, everything gains value or loses value or fucking stable? Talking out your ass with that shit. But looks a decent PDF anyway. There will be some good information in it, don't get me wrong. I just don't like the term stable coin. Fucking show me a stable currency in the planet. You can't. You fucking can. There's not one stable currency in the planet. So stop talking like there is. Jesus wept. If fiat currencies were stable, Forex traders wouldn't exist. They wouldn't make a penny. They wouldn't make a fucking penny if they were stable. Fiat currencies are not stable. There's Forex millionaires proving they're not fucking stable. They're volatile. Might only be 0.5 to 2% daily. Maybe even fucking less than that. 0.2% some days. Ooh. Still not fucking stable, mate. So wind your necks in before you start saying there's fucking stable coins without actually backing it up with a little bit of fucking explanation of what you actually mean by stable. Less volatility, fair enough. Pegged to something else, fair. That's a peg coin, mate. You got a coin pegged to something else of value. It's not fucking stable. Fucking hell. This is. Can you imagine some of the big rooms in the world with some of the ideators in the world, like trying to come up with ideas and talking about some of this shit the way we do, but with their knowledge. Now, I'm surprised I'm not seeing that much FUD yet. Let me find a bit of FUD. Towards a central bank digital currency, retail versus wholesale. This is July last year. Since Facebook announced its plans to come up with their own digital currency named Libra, a heated debate has risen about whether central banks should issue their own digital currencies. Right, that debate didn't start because of Facebook. Shut your foot. Who the fuck wrote this? You lying bastard. You lying bastard. That conversation did not fucking start because of Facebook. I can show you documents going back to 2015 talking about CBDCs. Where the fuck was Facebook's Libra then? Stop lying. Thin extra, spreading fucking FUD. So let's see why he's lying about this shit. One sec. A heated debate is raged about whether central banks should issue their own digital currency. Central banks worldwide have expressed their worries about Facebook's plan, according to them. The prospect of tech firm may also others in the future. Billions of users launches on a long time. In the lines of this plan may accelerate the idea of central bank digital currency, though there are no plans yet. There's some strong argument. Central banks counterbalancing Libra. Interesting. Central banks are seriously watching the emergence of a new global digital currency called Libra, introduced by Facebook. The birth of Libra, which is just a white paper, by the way, it's actually not a digital currency yet. The birth of Libra thereby serves as an alert for central banks and regulators. There's growing belief that if Libra could be successfully launched, it would challenge central banks' monetary sovereignty, posing a long-term threat to the central bank's control of money. Any role for Libra beyond that payment function could bring changes to the rules of global monetary system. Regulators should pay close attention to that possibility. Really? Really? I want you to have a little think now about everyone you know who uses Facebook but don't trust it as far as they can throw the fucking phone. Right? Yeah? How many of them are going to trust Facebook with a fucking currency over the Bank of England dishing out CBDC pounds? Yeah? Or the Federal Reserve of New York, or St. Louis and all the rest of them dishing out CBDCs of dollars. A China bank going to its people and say, yo, by the way, our currency's digital now. Deal with it, dickhead. Don't like works over there, mate. I assume that's what it's like. Russia doing their CBDC. Who the fuck is going to go to Facebook now? Don't get me wrong. Put a bit of money on Facebook and send it here, there and everywhere using ILP that's likely going to jump in a bridge asset called XRP. There is growing belief that if Libra could be successfully launched, that is a bullshit. From the government's perspective, we pay more attention to its influence on financial services, monetary policy, and financial stability. Well, it should say at the end of that quote there, that financial stability, and considering Libra's not even a fucking token yet, we're not even worried, mate. What you want about? What you want about, report? What you want about? And these reporters ask these questions. Some of them should just turn around and just go, what you want about me? You're not even a currency, it's a white paper. Fuck off. That should be the quote. Reactions. The initial cautious stance towards central bank issued digital currency, ranging from wait and see to very negative, has firmly changed. Central banks and governments from all over the world, as well as international financial institutions like the IMF and BIS, are now sounding a much more positive tone. The IMF, it is interesting to find that already last year, November 2018, International Money Fund started to examine the potential innovative nature of digital currencies and has supported CBDC's proposal more positively. Christine Lagarde, at the time managing director of the IMF, urged central banks to consider CBDCs since they could satisfy public policy goals, including financial inclusion, security, consumer protection, and privacy in payments. The Bank of International Settlements, well, just a few months ago, Augustine Carstens, sorry, but I don't like butchering names. I've got a shit name myself. Sorry for butchering your name. The general manager for the Bank of International Settlements was still questioning the value of central bank issued digital currencies. He recently acknowledged that the central banks will likely soon need to issue their own ones. Carstens warns that big techs have the potential to become dominant in this area thanks to network effects. Further, the arrival of such products might just be around the corner if there is clear evidence of demand from the public. And it might be that it's sooner than we think, that there is a market we need to be able to provide central bank digital currencies if Facebook and big tech companies get their way. However, we may have to do it first. BIS is now supporting the many central banks' efforts to research and develop digital currencies based on the national fiat currencies. At the very least, the BIS concludes in its recent report, new comprehensive public policy is needed to respond to big tech's entry into the financial services, so to benefit from the gains while limiting the risk. Big tech's entry into financial services, that is Google, Facebook, all the rest of them, all becoming banks and financial institutions, payment providers. The potential implications of such a change towards central bank digital currencies for the stability of the global financial system, however, ain't entirely clear. Now let's just stop a minute. Your country's got no fucking currency without a central bank. It holds every fucker's money. You know, all these entities, Amazon, money's in the bank, bruh. Someone owns Amazon's money. Not your vault, not your keys, not your value. Yeah? It's not fucking yours. It might have your name on it, but it's interesting. For me personally, it isn't the central banks that need to be worried. They fucking bomb people on a daily basis, mate. They do whatever the fuck they want. They're controlling paedophiles a lot. They ain't got to be worried at the moment. It's the commercial banks that are going to fucking die off. You're NatWest, mate. NatWest, innovate or die, NatWest, or you're fucked. I'd rather use Wirex than any UK commercial bank. Now, I'd rather use Wirex, Revolut, Ledger. There's my bank. Boom. All for a trifecta of being my own fucking bank. I can get paid into them. Don't need commercial banks anymore, but I want to use the pound as a value, as a unit of value. I want the pound. I'm British, of course I want the fucking quid. Stick your euro up your ass, man. I want me pound. It wouldn't surprise me if half of the Spanish want the fucking pesetas back or whatever the fuck they were. I can't even remember, man. French francs, Spanish pesetas, fuck me. Greek lira. I can't even remember people's currencies because of the fucking euro. Swiss francs still got francs, haven't they, the Swiss? You should have your own currency in your own fucking country. We need central banks to do that. The commercial banks, you're in trouble. The European Central Bank, though not taking an official position, a European Central Bank, ECB official, has come out generally in favour of wholesale central digital currencies. Interesting how Christine Lagarde bounced from the IMF to the ECB now, probably to help them and educate them on this exact matter. I cannot read this fucking name, so I'm going to apologise in advance, but Vitas Vassiliauskas, Vitas Vassiliauskas. Fucking what a name, mate. You have to tell me how to say that one day if you ever meet you. A member of the governing council of ECB and chairman of the board of the Bank of Lithuania. The Bank of Lithuania, ooh, interesting. A lot of people go in for banking licenses in the Bank of Lithuania, from Bab to Zum to a lot of other people, so that is fucking interesting. It might be worth looking into the Bank of Lithuania. Just saying. So this guy, chairman of the board of the Bank of Lithuania, said the question is not if, but whether CBDCs should be retail, wholesale, or both. A retail CBDC would be available for the general public, while a wholesale version would be restricted to serve a limited circle, mostly financial institutions. In between these two types, multiple theoretical submodels also exist. Submodels being an internal European bridge asset, maybe? Who the fuck knows? The People's Bank of China. The country's central bank is accelerating its efforts to introduce a government-backed digital currency aiming at securing a cutting-edge position in the global cryptocurrency race. The central bank is organising market-orientated institutions to jointly research and develop a central bank digital currency, and the programme has been approved by the State Council. A digital currency issued by the central bank can improve the efficiency of monetary policy and help to optimise the payment system. China's monetary authority identifies the nature of digital currencies and a substitute for cash rather than a speculative instrument, and the use of cash is declining in China amid booming digital payment systems. The central bank digital currency could be a new monetary policy tool or an investment asset that carries an interest rate to satisfy investors' demand for value. It might also be used as a reference for bank interest rates on deposits. The Chinese digital currency also could be used to domestically, but everything is just under discussion. Interesting. So why CBDCs? There are various arguments raised into issuing central bank issued digital currencies based on DLT. To what Right, they're listed below. Going over them briefly, then we'll end the video. Towards a cashless society, they want cashless societies. I've got a feeling they want to pull the homeless into the system and force the homeless into giving IDs, giving the names, giving all that, because you can't get on Wirex. If the homeless guy's got his smartphone and he wants some money off you, I ain't giving him change when there's no change left. So, not only is it a way of pulling all the people outside the current system into the system, make no mistake, we're trapped, we're logged, we're controlled, we're fucking cogs in a machine. We are. They're pulling them in it. That's what that's doing. It is going to pull them in it. So a cashless society makes it harder for some people who don't want to use the digital system to then gain financial services, to then progress and have a comfortable life. It is going to be hard. One of the reasons mentioned is that the Western world, a growing number of people do not use cash anymore. Physical payments are thereby gradually replaced by electronic payments. CBDCs could provide a safe, liquid payment instruments to the general public. They have the potential to reduce cash handling costs, since all the transactions can be made using a digital representation of money and are traceable. Formal-based economy, a shift in central bank money from cash to digital currency is another way to shift the economy from being informal-based to formal-based, so that the economy becomes more tax-based, transparent, and efficient. This is especially relevant for emerging markets. You know what? They might talk about AML and criminals using Bitcoin and all that shit, but this is proving in the end it's going to allow them to track us better, tax us better, make sure there's less money laundering going on, make sure everyone's declaring 100% of their earnings and they're not holding a little bit back in the safe for a rainy day. You're holding a little bit of cash back that you're not declaring, do you know what I mean? All them days are going to end over the next 10 years. And should the end? Should we? It comes down to how much the politicians are earning for doing what they do, and then we end up having to put buddies to the side and don't want to give them the money because they take the fucking piss. If they started living more respectfully with a little bit of fucking integrity and dignity and just did what the country wanted them to do and did their best for the people at all times, we wouldn't be so pissed off with them. Increased financial inclusion. Another motivation for especially emerging economies regarding CBDC's proposals is financial inclusion. In many of these countries, a large number of people are unbanked and or without access to commercial banks and the internet, and thus excluded from conventional banking services. CBDCs might promote digitalization of the economy and thus economy and social inclusion. Now we go to Africa, you might see some people who want to be financially included, who can't get by with cash, who need a digital economy. So that's a fine line between the homeless in the Western world who don't really want to use a digital economy, don't want to be part of it, to the people in emerging markets and less privileged countries, struggling for the words then, less privileged countries should we say, are going to maybe want to come into a digital economy. More effective monetary policy, shifting from cash to digital currencies through issuing CBDC may enhance the effectiveness of monetary policy. Reset, such as negative interest rate policy under the effective lower bound, because of limited the scope of cash substitution that could emerge to avoid a negative interest rate. Implementing CBDCs can allow new monetary policy tools to be used. Alternatively, CBDCs can be used as a tool to increase aggregate demand by making helicopter drops of newly created CBDCs to all citizens, making it easier to meet the central bank's monetary policy target of price stability. Safer and more effective financial systems, something we can all agree we need. They are the efficient and financial stability gains to get from CBDCs. CBDCs has the potential to improve the existing wholesale financial system, including interbank payments and settlement systems, delivery versus payment systems, and cross-border payments and settlement systems, allowing individuals, private sector companies, and non-bank financial institutions to settle directly in central bank money, transfer them rather than bank deposits. So it may significantly reduce the concentration of liquidity and credit risk in payment systems. This in turn could reduce the systemic importance of large banks, in addition by providing generally risk-free alternative to bank deposits. A shift from bank deposits to digital cash may also reduce the need for government guarantees on deposits, eliminating a source for moral hazard from the financial system. Interesting. The use of CBDCs may promote a technological environment and foster the fintech sector. This is especially relevant for the emerging economies. Those economies may find it difficult to develop banking systems and capital markets that are comparable to those in advanced economies. Fintech services are new and innovative, encourage competition and innovation. The regulation framework would make it significantly easier for new entrants to the payment sector to offer payment accounts and provide completion to the existing banks. It would also reduce the need for most smaller banks and non-banks to run their payments through the larger banks, who are able to set transaction fees at a level that disadvantages the smaller competitors. Interesting, it's mentioning fees like that. So this is what ILP is going to do. It's just going to say, listen, Dicker, don't take the piss with your fees, because we'll just go somewhere else through ILP where it's dragged out at pretty much zero. Just sort your neck out, mate, and lower your fees. Or stop charging me to send me all money, you prick. So it's coming to that shit. What sort of central bank digital currency? When discussing the options of central bank digital currencies, you can have retail, wholesale, explained above. Retail versus wholesale. Compared to emerging economies, central banks in advanced economies are not enthusiastic about retail CBDCs. And that is not surprising. Many central banks do not wish to create competition between central bank money and private sector money, taking into account the limited potential benefits from using retail CBDCs. They're clearly not thinking of the homeless side of it there, pulling the homeless into the system. That's not for the bankers to think about. That's something that the government are going to want to do through digital identity, KYC, and then the CBDCs. A retail CBDC would be a step too far for them if a central bank issued a digital currency whereby everyone, including businesses, households, and financial institutions other than banks, could store value and make payments in electronic central bank money. This could have wide-ranging implications for monetary policy and financial stability. Wholesale central bank digital currency would bring a number of important efficiencies. Beside their retail payments and settlement systems, they are already highly efficient, almost in real time. Right, I'm going to stop there. So the banks basically bring a little bit of FUD in for your own system, because if I was to say that to a load of Brits, they'd be like, well, yeah, the banking system is rapid, mate. What you on about? It is instant. I'd be like, I can send you a tenner now and it's going to go instant, £10 from my account to his account, bank pound to pound. So an account holds pounds, going to another account holds pound, it's instant, right? So they don't see it. But go and buy something off Amazon and it takes fucking 3 days to come out of your account. Send money to America and you're charged just to send it. Never mind, you're not even buying anything, you get charged just to send your money. So people who all live in their own little bubbles aren't going to see the need for something like this. Anyone who's doing international payments, remittance payments, starting a business that works globally or anything like that, you're going to see a massive need for it straight away. And the bankers, in my opinion, are remaining a little bit tunnel vision, or they're not telling us everything. Make no mistake, they're going to create CBDCs, they're going to digitize the economies, tokenize the currencies, and they're going to need a bridge asset between them. They really are. And there's only one bridge asset that truly meets all the requirements at the moment, and it's XRP. Again, I'm not saying it's going to be the only one. I'm not saying it's going to be the only one. There will be a healthy choice in a level playing field. It's just the first currency that's a bridge asset. It's the first currency that's a true multifunctional digital asset. It's the first currency that's setting the standard. ILP set the protocol standard, XRP setting the currency and asset standards. You can't keep up with XRP, ILP is going to choose it instead of yours. It's as simple as that. IBM use XLM all you want, mate, but if it's not looking as liquid or as easily and as cheap and as fast and as reliable as XRP, ILP ain't going to it. Simple as that. On that note, I better get a move on. Got some shit to do today. There's a big business event in town that I was going to go to, but I haven't got time, which is a bit of a shame, but oh well. Guys, I'll cover this a little bit more when a bit more comes out about it. I wanted to do it again because it's been a while since I spoke about them, and it seems that the community is just not really getting where we're going and why we need XRP and other bridge assets so fucking much. I've said it before, I can't wait till the currencies are out of the way so we can actually see a full-on internet of value of anything being moved through Interledger protocol. It's exciting times, guys. It's exciting times. Enjoy the rest of your week. Live long and hodl your assets, baby. Take care of yourself. Wishing health and happiness to you and yours. We love crypto. We love XRP. We love CBDCs and the idea of them, baby. You know we do. And lastly, we love you. Peace.